and welcome back to Franchise Vibes. This is Tamika, franchise consultant at Precision Franchise, and our vibes today is coverage vibes. What every franchise owner should know about health insurance. So this is a great topic, guys. I do get this question every now and then of someone that's worried about coming in, even though typically in franchises, there's a lot of resources that will be available to you. But there's always that worry, especially when transitioning from corporate into business ownership, and that could be any business, right? On, well, what do I do about my health insurance? They're so used to getting it from their corporate roles. Well, I'm glad that we have our guest today, Anthony Carpenter, the managing partner at Compass Health Consultants. Anthony, welcome to our channel and thank you for joining us.
Thank you very much for having me today. It's a beautiful day out.
It is, it is. So, tell us a little bit more about yourself and how you came to be and how you got into Compass Health Consultants.
Oh, wow. So I won't bore you with too much of it. So, my wife and I, we came from the finance world, worked in finance, financial planning, CFP, all that, those letters and things like that. And I had congestive heart failure.
Oh, wow.
So, I was younger and thought I was invincible. And, I was in the hospital for 10 days and almost died. And they brought in a specialist that was actually out of network with me. And he saw me for 5 minutes and told me I was going to die. And I cried like a 3-year-old and in front of my kids, my family, and everybody. And my wife and I got a second opinion and I was able to recover. Fully recover, and we're very thankful every day. So we didn't want that to happen to everybody else, and I was looking to be able to do that. And then I found my partner, both of them, Brian Dixon, who's one of the founding partners, and Joe Crivello, the founding partner of Compass Health. I wanted to work with somebody that built health insurance and worked with all the carriers, so somebody wouldn't have to go through what we went through. I mean, my poor wife and I went through bills and all kinds of stuff with no education whatsoever, and it's really shocking. And it usually happens at, your most vulnerable time. So that's how we started our journey almost 10 years ago, and we've been going ever since.
All right. Well, I'm glad that you were on that road of recovery and everything is good now, right?
Yes, thank you.
Perfect. So I love that you say education because I do think that that is something that's very important, and a lot of us, are misinformed by a lot of things like that. So, what would you say is the most common misunderstandings for owners or franchise owners have about health insurance costs?
That's a very good question. And the first thing is understand that when it comes to health insurance, everyone wants it to work, but they don't want to know what's really behind the scenes.
Mm,
So cost is a relative question to each person, you know, understanding what your needs are and your values and your risk is more important than anything else. So I may have a much lower risk tolerance than somebody else and because of what I went through. Other people have a higher risk tolerance. So that it's very relative. And the other thing is understanding that about most people don't understand how insurance really works, where they think I have a card that says Blue Cross Blue Shield and they're my insurance company, and Blue Cross Blue Shield doesn't insure anything. They're a
mhm,
network. There are 32 independent insurance companies that own them. So those are the two biggest misconceptions that people have is, we don't want to cookie cutter them, just learning to understand what their values and risk is for their family.
I see. So, can you explain the difference between marketplace plans, group plans, and association style plans?
Yes, absolutely. Okay. So obviously, we all know when the Affordable Care Act came out, they created the public marketplace. So the marketplace came up with a set of rules and said, we're going to give you an open enrollment. Anyone can sign up. It's based off of income and age. That's it. All plan designs are the exact same. It doesn't matter which carrier you use. There's bronze, there's silver, there's gold, there's platinum. You can sign up during your open enrollment period. And since it's income based, if your income's low enough, you can qualify for a subsidy. Where the franchise owner and business owners like myself get into some pickles because I'm a business owner myself too is I pay myself a very little bit amount of money because I don't like to pay taxes. But when, we just expanded a building or I bought a fleet truck or I wanted to buy a house, I have to show more income. And then the marketplace comes back to me and says, whoa, 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 you owe us money.
Mm.
And that's how the marketplace works. It's income based, 100%. You have the choice to pay full price. It's guaranteed. Now, not going too deep into group's exactly what it is. It is just pooling a bunch of people together to get a better rate. It comes in all kinds of shapes and sizes. We don't want to get too fancy. There's billions of different times of them out there. And associations are group plans. Now, there's some really, really fancy schmancy ones out there, and there's some, not so much ones out there. So there's good and bad in everyone out there. But an association plan is the same way of us trying to pool people together to get better rates and better coverage. By pooling the assets, pooling people together, we can spread the risk more because that's the number one thing in insurance is spreading risk. The more we can spread the risk, the more we can keep premiums stable and things like that.
So for a new franchise owner or new business owner, they may have less than 10 employees. What are the like reasonable expectations around health insurance costs for someone like that?
So once again, we do thousands and thousands of groups every year, starting from two. I can put an individual on a group plan all the way up. It has to be different. So when we're talking to somebody, before COVID, everybody told me group wasn't important. I couldn't afford it. I couldn't afford it now. If you like Forbes, you look at Reuters, all these magazines now, anyone over 35, benefits is the, most important thing to them now. So a lot of the smaller business owners, which is the fastest growing demographic in the country and the most underserved demographic, because they go, I don't know where to go. I don't know what to do. So they'll go, they'll call Blue Cross Blue Shield and say, okay, give me a quote. And they don't really know anything. So there's several things we look for when we are looking to offer benefits. Okay. First and foremost is why. So you get a lot of people where it's a husband and wife team and they're just working 70, 80 hours a week. They're trying to hire a quality manager. Well, that's not a group plan. I just need to get insurance for a quality manager. You're under 50 employees. So that's the problem we solve. Or they just expanded and they're going, okay, we want to invest in growth and the happiness of our employees and the security of our employees because training new people is expensive. That's a good reason to do those types of things. We also get another people where they're starting to struggle and they think offering benefits is a way to, entice people. And we really want to inform them on, what's our reasoning for this? Are we recruiting one person? Are we trying to use it to invest in our business and keep our employees happy and keep our employees stable so we don't have to go through that cycle? Those are the first two things. Once we solve that, I don't even talk contribution strategy because realistically saying, statistically, rates can be all over the place. So we want to first start is what's your investment into your employees, your budget, your things like that? Well, I don't have a budget. Then we got to sit down and discuss comfort levels with them. At the end of the day, it can start, very, very minimal. You can start with minor benefits, dental, vision, life, accident plans, things like that. And you can go all the way across the gamut. You can actually put a small business owner, let's say, on a large association where they're just piggybacking off that association. Where it's just really amount of what is their real motivation. A lot of people, they go in and somebody quotes 20 people and they're not listening to what's going on with the business owner.
Mm.
We want to find out what they're trying to do, because the other thing too is you don't want a business owner to go, well, I do it 1 year and then I can't afford to do it because of what's going on. So we
Right.
ask them really, what are you looking to invest? We call it a contribution strategy to make it a fancy word, but what's your comfort investing in your employees? If somebody comes to me and says, I'm looking to do this for the next year or two, 5-year window, then we start building it based off of their needs. If we have less than 50, I can pretty much match within reason, any budget. It's just a matter of adding bells and whistles and taking bells and whistles away.
Wow.
The
Okay.
key thing with the business owner is information first. Okay, so we all get quote happy, want to quote, I want to see numbers and all this stuff. Man, I have every single contract. It doesn't matter to me one way or another. It's coming back to somebody like us.
Hmm.
But really figuring out the value of what we're trying to solve. And if somebody's not doing that, then
Hmm.
they're really not doing the job for you, because you may have, okay, I got a number and it may be good for 1 year, but now I price myself out of the market. So it's got to be a needs based. What's the business outlook? Those are the two biggest things. And is that business comfortable with that contribution strategy that we developed together?
Yeah, I really do. That resonates a lot, the needs-based analysis. So at what point should they consider moving from individual plans to offering small group plans?
So I have, there's not, these are not all the reasons,
Hmm.
but I gave you one of the key reasons. One of my biggest success stories is I had a husband and wife team. They owned a Subway. Okay. They opened a second location. And then they hired a manager, and it was just a husband and wife and a manager. So we put them on an association plan because A, it was tax deductible for them. And B, it gave them much more flexibility in cost and price because they had 3 or 4 16 and 17-year-old kids that, you know, it was a one for one. But now their business has grown that they own rallies and checkers, and they have a huge 280 person group plan on it now. So a lot of it is when we start to get to a point where do we want to invest in the stability of our employees? Are we trying to grow? Are we potentially, looking for, I don't know about you, I don't like paying taxes, but are there some tax advantage, things out there? So those are the key ones. The last one is recruiting. If they're looking to recruit, it's a key thing. People ask, listen, I've got 2,600 people. I hire people, and the first thing they ask, what do your benefits look like, now? And it's really scary for a small business owner, especially for my first 5 years, to go, well, wait a minute, my revenue's not stable yet. I'm still having all those things. There are solutions out there that don't require you to be locked in for at $700-800 a member a month and stuff like that. So just a member of, getting that information out there. But those are going to be some of the key things that people really, really look for.
All right. So are there some practical strategies that you can share of how owners can, I would say, just keep the costs down for healthcare, without sacrificing coverage?
Yeah. So, you know, in the insurance world, nobody likes to just have the factual, honest truth. Okay. So if I have 3 people, okay, and I'm insuring 3 people, and we'll just say Anthony, as I'm on it, and I just have congestive heart failure. I just took a group that a third of them is now an ultra high risk. So I have to find a way to spread that risk. So maybe I need to be on everything I'm talking about is ACA compliant major medical. Okay. So we're not talking about hybrids or anything else. I got to spread that risk. So maybe Anthony's business needs to be in an association type plan to spread that risk. That's a very good option. Other times, by managing your cost and strategies are having your relationships with your, let's say, your brokers and things like that. So I play both sides, so I have to be good to both. Is you know prescription drug strategies, understanding utilization. So a great example is you may be a small business owner and you have a young mother. She's 22, 23 years old. She has her first kid. She's going to the emergency room because she thinks it's a pediatrician. You
Mhm.
know, being able to say, ma'am, here's Teledoc, here's a 24-hour, being able to do those things and provide those resources to people, that really significantly cuts costs. The other big thing is, listen, Ozempic's very popular right now. Let's be honest, drug cost is another thing. So finding, trying to manage drugs. I'm not saying we can manage everyone out there, but informing people and, being able to do things, a great example, there's some expensive, anything that you see on a commercial is going to be expensive. That's a good rule of thumb. And they have a lot of times they have biosimilars and things like that that are owned by the same company, guys, by the way, most of the time, and they're significantly cheaper. So those are your ways of, really, reducing that type of risk and things like that. Just making people aware where, if I'm going to get my annual screening, and stuff like that, well, and if I go to, Quest or LabCorp, it's significantly cheaper than me going to a hospital. And, your advisors should be advising you on that, not just, saying, here's your quote, and then I'll call you again at the renewal. If we're not helping to proactively manage what's going on, things can get out of control.
I like that, and I want to touch on a little bit of like risk, right? So as you mentioned, there's a lot of alternative plans, and so a lot of them is going to advertise, cheap, 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 right? So what should businesses look out for, or what should business owners watch out for or avoid?
Okay, so you got me on a hard one here because I do both. So I have captive and uncaptive, people that I work with. So first and foremost, you have to understand that stop name shopping.
Okay.
Biggest mistake people make. Once again, if you live in Florida, you're like, I got Blue Cross Blue Shield. No, you don't. The company that owns this is called Guidewell.
Um,
You're in Texas, Blue Cross Blue Shield. It's owned by a massive company called Healthcare Service Corp. Well, a lot of those companies have other brands that help spread the risk with more flexible products. Healthcare, they have different product lines and different things. So we start wanting to go brand. And let's be honest, do you think that United Healthcare is going to make $100 billion writing checks for everything? They spread the risk too. So that's the first thing. Understanding that, oh, name. Okay.
mhm.
Understanding that first. Secondly, really asking the questions. We get a lot of brokers out there that say, I work with every carrier. Listen, I've been doing this almost 10 years, and I'm not the pot calling the kettle black. I was a new broker once too. So if they are, I saw this one the other day, it was great. I saw a renewal and it said a uncompetitive United Healthcare quote available upon request. Well, why didn't I just send them the quote to begin with if I already did the work to find out if it was uncompetitive? If you're looking at group in most areas, if you're in most major areas, there's going to be 24 on average options. So, Florida, Georgia, New York, California, there's going to be 24 of the big boys, out there in the big associations in most places. In rural areas, it can be little, but you definitely want to have multiple options that you're looking at. And it's okay if the broker doesn't have a lot of them. It doesn't mean he's not good at his job. It just means he built his career off of that niche. And a lot of people have done very, very well off that niche. There's a lot of captive Blue Cross agents. There's a lot of captive, agents that only represent, Humana and things like that out there. It doesn't mean they're bad agents. It means that's what they represent. So you want to make sure you're having multiple options, across the board. And and the other big thing is your risk. Understanding, it's not just about the premium, because someone will say, well, I want a lower premium. Well, okay, that's great. I don't know about you, but 8 out of 10 times when I quote a group, how many of those employees can afford $9,000? How do we factor those types of things into it? So, there are solutions. So really understanding the cost and the risks going on. Sometimes it's, listen, it's just not feasible right now to do group. Maybe we just do a defined contribution and throw, do an association out there and they get the defined contribution and you're good to go. So those are the really, really big things to look for out there. Make sure you got multiple options across the board. Make sure that we're really looking at managing, your risk and your comfort level. And the other problem that we have, and I'm just as guilty of it, is we can Google stuff and go down a rabbit hole all day long. And I'm just picking on Blue Cross because they're big. And I just got off the phone with them before I got on the thing with you. Well, you're never going to see a good review about any insurance company, but I sure as heck don't want to bump in Florida Blue and Blue Cross Blue Shield of Texas. They're completely different companies. They don't talk to each other. So, that's also what makes it difficult for people, because insurance is a buzzword. I mean, every election is a buzzword. Everyone's got an opinion on it, and no one's ever got a good one because we only talk about it when it doesn't work. I'm the same guy. I got in this business because mine didn't work. So, understanding the risk, understanding that it fits your guys' individual needs, and you're comfortable with that. And once you're inside of that, understand that 9 times out of 10, you're never locked in. So, if 6 months down the road, it's not working, get rid of it. That's the other key. If it's not working, get rid of it. People say, well, I can only change during my open enrollment. No, that's a falsehood. That's a broker sales tactic. Hate to break it to you. I can only cancel during this time. No, you absolutely can. We do it all the time. Two things that we can do on most times. If someone goes, Anthony, United Healthcare's killing me. I can't get any customer service, blah, blah, blah. Okay, great. Here's Aetna. I can transfer people's deductibles from one carrier to another. Mid-year, it's 100% legal and compliant. Most people don't understand what's out there because most brokers don't share that with them. But don't get into something 2-3 years thinking it's the only thing out there. I mean, I'm sure if you're in the middle of like Wisconsin or something, nowhere, you may have limited options. But if you're in a decently populated area, there's going to be plenty of options for you.
Interesting. So, what are some of the questions that owners should ask before signing up for any health plan?
Okay, so great questions. So some of the questions that we're going to ask is, first is, I'm a firm believer in underwriting. Okay. And it doesn't matter the carrier. I don't care if it's United, Aetna, Cigna, Blue Cross Blue Shield, you name it, Trustmark, name them all. I'm a firm believer in underwriting. Big things first, too, if you want to weed out the fake stuff out there, okay? Is it major medical? And is it compliant? Okay. If someone starts hemming and hawing and they can't say it's major medical and it's compliant, that's something we get scary about. Doesn't mean that there's not alternative plans out there that work for people. But if you want to narrow things down, major medical, is it compliant? Right then and there. Okay. And it comes in all forms of shapes and sizes. Secondly, what carriers are we going to be quoting?
Mm.
Now, if a carrier declines the quote, I can forward a customer that email that says XYZ carrier declined the quote from the carrier saying we don't want to quote that business. But that's the thing. I love, and most carriers what would do what's called AI underwriting now. It's like your criminal background check. They do your medical background check. It's called your Medical Investigation Bureau or your Milliman report. They can pull all that for you. You want them to do that. And here's why. A good broker will say, Aetna gave me this rate. United, will you beat it? Takes an extra couple days. And United will look at the same thing, go, we want that business. We like this area. We're expanding. We'll take off a few more percentages for you. So a lot of people go, well, I'm diabetic. Diabetic doesn't kill a plan. Listen, 3 out of 5 people in the United States now are diabetic. So, but you want them to do that because you get them to be more aggressive with your plan and plan options. So I do like underwriting 100%. Whether you're a group of 5 or a group of 50,000, well, anything over 100 is required anyway. I like that. And we always have GI options. There's plenty of GI options, but I just want to see all of them out there. If I come back and someone says, well, this is underwritten, this is GI, and the GI is better, great. Well, it's fantastic. Now I get to see most options. The other thing you want to ask, is my deductible going to be plan year or calendar year? So if I'm signing up in, April, May, June, July, does my deductible renew at, calendar year or plan year? A lot of companies like it renewing during open enrollment because it's just easy for everyone because they're used to it. Some companies that do their taxes later on like it June, July, August because they want it to coincide with their taxes. That's a big one. It also affects price a lot too. Lastly, the other one is what do we have there for prescription drugs and prescription drug help when things come up, because that's probably the biggest driver in the last 5 years. So with things come up, how do we get ahead of it and what special programs are we doing? So those are the big ones that we really look at. And I always want to see 3 carriers. Let me see 3. Even if 2 of them are terrible, I want to see it. That way you know that it was shopped to multiple places.
So just thinking about the trends and the market, just what's going on, have you seen any trends on how small business owners are approaching healthcare coverage in the last few years, or even
Yeah.
just what does the future of small business health insurance would look like?
Insurance in itself has taken a big change. And, we sell ACA, we sell group, we sell the whole 9 yards. The market itself, because of the unbearable cost of drugs, requires us to get more creative and spread risk. So, every insurance company uses risk management. You just hate to, we don't want to know how the sauce is made. So we find solutions to do that. So you're seeing more and more trends where small businesses are, making, joining association plans that have been around a long time. You're seeing a lot more demand now for that, where it was, 7 years ago, the small business group market had 1 or 2. In almost every state, I probably have 27 to 30 carriers that are competing for business now because it's such a high demand. But we're seeing trends of people doing separate things for prescription drugs. We're seeing things where, to spread the risk more, we do what's called fully compliant gap coverage. What I mean by that, this is not Aflac, and I'm not knocking Aflac. I work with them. Please don't, I also work with Allstate and Colonial and all the rest of them. But what I mean by fully covered gap, it means it's a dollar for dollar benefit that coincides with your plan. You turn a card, it does this. It's a cashless. You don't have to file a claim. You don't have to redo anything and stuff like that. We have to get more creative in spreading the risk, and that's the biggest trend. There's no way out there that the market itself can bear what it's bearing. There was a lot of fraud in the marketplace, and listen, I got agents everywhere. The carriers can't bear taking on that much risk without, getting money coming back some more shape and form and things like that, especially with prescription drugs. So those are the biggest trends that we've seen is getting creative, adding, gap plans, joining association type plans, getting secondary type things just to spread that risk to cover certain gaps to help everybody across the board.
So as you touched on before, as far as like, because I can relate to people just doing one little search and they getting bombarded with a bunch of things. So when owners are overwhelmed by plan options, what is the first step that they should take to gain that clarity?
So the first thing is, and I'm the most guilty guy of it, is stop looking at ChatGTP, because it's going to go down things. So I like to make it very simple for a business owner. So you need three things, okay? Risk is it. How do we break risk down? So you have what's called your first dollar benefit risk. So does my plan require me to meet a deductible before services? Okay, that is the first risk that they're looking at.
Okay.
Second risk is what is my benefits that the insurance carrier is paying until I hit my max out of pocket, and am I comfortable with that total dollar amount at the same time? That's the first one because a lot of people get fancy. They'll say zero deductible. Okay.
Mm.
Guys, there's no such thing as a free ride with an insurance carrier. You are committed. You have to have skin in the game with them. I absolutely love it. I have a zero deductible. I promise you, you either gave away coverage or there's something, in there. So that's the really thing is, are you comfortable with this? And everyone goes, you see a lot of people that'll say, well, um, I want this low deductible plan. And then I go, okay, but ma'am, you're paying $30,000 a year. Well, I'd rather pay $500 a month and a worst case scenario, an additional, let's say nine, and I save 15,000. And if I use three, I'm still 15, $17,000 ahead. So
Mhm.
those are really, and people don't spend enough time doing that. Everyone loves to hear, oh my God, it's a PPO, it's nationwide coverage, it's all this. We do all that. We forget about the risk. And that's what's truly important to the members. What's my risk? Because I need this to work when I'm at my most vulnerable. Because people also don't understand something that's very important. This is probably the most important thing that I share with people. Listen, you can go to the emergency room and they're going to fix you up no matter what. That is great. That is not what hurts people.
Mm.
I'm a heart failure survivor. I had to go through cardiac rehab. If I didn't have insurance, those cardiologists aren't allowing me in their office. So that's really the understanding of it. Well, they gotta fix me. Well, no, they have to make you stable. Now, so you don't have another heart attack again or heart failure again, that's the true risk to somebody. How do we alleviate that? It's the aftercare. Oh, I had a mild heart attack. There's no such thing as a mild heart attack. I hate to break it to you too. But, and if your broker and the person you're dealing with aren't discussing these things with you,
Mm.
that's where we got to talk. We do it. Are you guys understanding that we're comfortable? This is the risk that's going on, and it's the recovery time. That when a traumatic event happens, are we okay with this? Did we build this in the best we could financially? For everybody, because that's the truth. Especially if let's think about it, you got a husband and wife team. My wife and I work together. God, I could not do her job whatsoever. So if she wasn't working, it would cost me a lot of money to replace her. It would also take a lot of time away from everything else. Do you think I want to spend a lot of time worrying about my insurance? So having those things in place, and those are very important things. If we're just throwing out, oh, it's fancy, oh, I got this awesome PPO and all that stuff, and we're not talking about the real important things, what happens when something goes wrong, and how are my employees going to be affected?
Mhm.
That's it. Everything else is just salesy stuff. Listen, I started as an agent, so I was there. When I that's it. The owner wants to know if my employee slips and falls and he goes to the emergency room, is he going to be taken care of?
Right.
Great. If he has to go over here, great. Is this going to kill my renewal next year? Those are the important things. Utilization. Does he have the resources to support him? And when something goes wrong, how's that follow-up going to be handled? And that's really what it really boils down to.
Nice. I really appreciate this information. Where would you think that small business owners can get, unbiased and just reliable information about insurance options?
Well, you're going to have to shop brokers because every one of us that publishes an unbiased approach is biased because it's published by some sort of insurance company or some sort of marketing company that they own.
Hmm.
It's just there's no standardized, like, if I go to Tech Geek and I want to compare computers and stuff like that, that's out there. Everything's either, and listen, it's my industry. My job is to make the best of a bad situation. You know, you're gonna be able to do some research. All of it, most of it's gonna be bad. Let's just be honest. If I go Google United Healthcare, it's bad. If I go Google Blue Cross, it's bad. But doing that, the biggest thing is just making sure that you got some A-rated paper. That's
Hmm.
the real company that's insuring it. B, it matches your financial risk, and B, understanding that there are brokers out there that they only have access to a few carriers. It's not making them a bad broker. It just, getting a couple opinions is okay. Yeah, it's okay to have multiple opinions. Not we're all going to say we can quote everything. Oh, great. Show me. And when the guy shows you and he takes care of what's important for you, that's usually the guy you're gonna go with. The other big thing is, what's your support? What's their support staff? Well, I have an assistant. Okay, how many companies can we service that way? Everyone knows as well as I do. I don't care. Customer service at any health insurance or life insurance or auto insurance is difficult. What are the resources there to service you when you need? How big is that team helping out? And if they have a good sized team and a good portfolio and they've been doing it a good time, I mean that's going to give you a good enough thing out there. And if they can provide just different types of solutions when things change. Those are all the best ways of really, narrowing it down.
So as we wrap up, Anthony, any final advice for our audience out there, those who are actually business owners and franchise owners that may be paying attention, that may be watching us today?
Final advice. Benefits is gotten so important. And I'm one of, a business owner myself. You know, take a step back, make sure it's in your plan. Make sure you're comfortable in knowing where you're at. If we don't know where, next week's check's coming from, benefits may not be the thing. Secondly, you know, make sure that the person you're working with is addressing your needs. If they're not addressing your needs, then they're just throwing quotes out there and here's the price and it's cheap and all that type of stuff. Run.
Mm.
You know, those are the two things. It's okay to ask lots of questions. You know what? It's okay to go back and say, can you change the quote and give me something else? If they're willing to do that type of work for you, that's someone that's trying to earn your business and give you the type of service you need. But take the time to really figure it out. Now, I'll give you an algorithm that helps. Okay. So this is a nationwide thing. So we're just going to do the average on average, without pooling risk. Okay.
Mhm.
That means I didn't throw it on an association plan or anything else. Everyone in the US's base rate for what we call major medical is about $150 per 10 years you're on the plan. Now, obviously, if I go in a group, it can spread that risk, or I'm on a union, I can spread that risk and things like that. But on average, if you live in Tampa, Florida, it's going to be a little more. You live in New York, it's going to be a little more. If I live in, other areas, it's going to be a little less, Alabama and things like that. But on average, that's what you're looking for a base a base, base rate. If I'm coming in under, tell me why. If I'm way under and I'm not on a massive thing that's spraying the risk, I'm giving coverage up. I just want to know where. So that can give you a reference. But now, if I'm already on a group plan, that was your, starting base rate, and it goes up, up, up on renewals. But that's a good base rate. Don't hold anybody to it to start because it depends on your area. But that's a good nationwide base rate.
All right, Anthony, thank you so much for joining us today. And thank you for the insightful information you have on this topic. I think it's incredibly important, and it has been something that will come up from time to time. So I think it was time that we did have this topic here on Franchise Vibes. Well, that was great. I hope you guys learned as much as I did and was able to take back this information. Thank you for joining us today at Franchise Vibes, where we discuss franchises and everything in between. Take care. Until the next time, everyone.